I want to share this breaking news with you from the team down in Washington. Russia has transferred US dollars to settle coupon payments due back on Wednesday on 2 Eurobonds. You remember the amount? $117 million. This according to people familiar with the matter. The story goes on to read, the people declined to be identified because they aren't authorized to speak publicly on the issue. A Treasury spokeswoman said US sanctions on Russia don't prohibit Russia from making these debt payments, mirroring a statement similar to the one that we got on Wednesday. I want to bring in Damien Sassower of Bloomberg Intelligence on this story. Damien, figuring this out piece by piece is really difficult. I know you spent a lot of time on it Wednesday, Thursday, again this morning. Run us through what's been happening here, where we've had difficulties and what it might mean for future payments.
Yeah. So basically the $117 million, from what I understand, JP Morgan would have never sent those funds on to Citigroup if the U.S. Treasury had not authorized it to do so. So it seems to me that the U.S. government is fine allowing Russia to pay from non-sanctioned accounts to its foreign creditors. So it's not going to block that payment. It looks like Russia is fulfilling that payment. Those monies will hit the accounts today. I think the real question, Jonathan, that we need to ask is, why on earth would Russia pay U.S. dollar creditors coupon when it's trying to wage this war in Ukraine and its economy is suffering so very badly? So the answer, really, there's three cases. There's the conspiracy theorists who think that those bonds are owned by Russians, which I apply little faith to. There's the optimists that said, look at the timing yesterday. We were perhaps in a de-escalation, and Russia said, maybe we'll buy some time here because we want to avoid default. I put little faith in that also. For me, I'm taking the pragmatist argument, the fact that if you look back to July of 2019, when Crystal X pierced the veil of sovereign immunity for the Bolivarian Republic of Venezuela, basically, the Supreme Court upheld the Third Circuit Court of Appeals allowing private creditors to go after offshore assets held by not just the sovereign, but a quasi-sovereign entity, in this case PDVSA's Citgo refining assets. And creditors will aggressively go after Russian assets offshore if the default actually is triggered. And so I think Putin's trying to buy himself a little bit of time, because the last thing he needs on his desk right now are creditors accelerating the process against all Russian assets located offshore.
So, Damien, two things. Whenever you assess these things, I'll try and make them really simple. You have to assess ability to pay, willingness to pay. What we've demonstrated this week is willingness. Future ability, I think there's still a question mark, because the first thing I was thinking of is, where did the dollars come from? Clearly not sanctioned accounts. Maybe that would be a conspiracy theory, so to speak, because I've got no idea. But clearly for some people, that's not where it came from. So my question would be, Damien, if they've met this payment, do they have the money to meet future payments?
So, yeah, an answer to that is I do believe they have plenty of money that they can lean into, and money that is non-sanctioned at this point. The reality is, though, they have the willingness to pay, they have the capacity to pay, but if they are physically unable to pay, S&P and Fitch have already said that will constitute a default. If the monies don't arrive in the creditors' accounts, that is a default. So really, at the end of the day, Jonathan, what you're saying and what you're hitting on here is the U.S. Treasury can actually force Russia into a default if it chooses not to approve the money transfers. And that is exactly where we are today. It's a very slippery slope.
And that point's the point I want to build on, because S&P lent on this. They were a little bit more subtle about it. They said if the funds are not accessible for investors, isn't that another way of saying even if sanctions stop the pipes from working, even if you try and send it, if it does not reach the end investor, we're calling that a default?
Absolutely. The sanctions are of Russia's own making. And so the rating agencies are going to constitute it a default if, they just can't move the money across borders and get it to the creditors that are owed it. And so that is really where we are. It's an unprecedented time, Jonathan. Capacity and willingness to pay, but still may go into default because they're just unable to pay.
We're learning things about the sovereign and how these payments will be made, how we'll process them through US banks. That's one thing. The second point for me is the corporate story. Damien, is there a different thing happening here? What we've seen from the sovereign and what we've seen from corporations?
So corporations are in a very, very different, so they basically can't really make payment. You've seen Yandex trying to approach creditors to restructure. In fact, in Servicetel's case, they're saying that the U.S. government may not, for whatever reason, allow them to make payment, maybe because the cash is held in a blocked account. So there's a lot of piping and logistics to go through, but it seems to me that OFAC and the U.S. Treasury are firmly on top of this and talking very, very closely with JP Morgan and Citigroup, in order to ensure that whatever monies are paid, they're not monies that have been sanctioned, that are held as war repatriations for the people of Ukraine and for the rebuilding of that country when and if this all ends.
Is there anything about this story that gives you confidence about this asset class, this world, Russia, or anything attached to it?
Jay Newman, former Elliott, pointed out yesterday that this could be the beginning of a 1980-style wave of sovereign defaults. And that's for a very different reason, not tied to what's going on here in Russia. If that does indeed occur, it's because these economies are weak and they've gone into, they have huge debt levels that, quite frankly, I don't see how they're going to pay it off. So, they're going to keep pushing the can down the road, but eventually the rubber is going to meet the road, and in a rising rate environment where financial conditions are tightening, the real risk here is that you're going to see a wave of sovereign defaults along the periphery in EM. And, I don't personally call that my base case, but yeah, it's certainly a risk, and I mean, it's a possibility.